I've been very caustic and critical of the way debt funds have been giving returns in Indian markets. I've never advocated debt funds for a long term market. At best, I've talked about for holding for 1 year, even which I have stopped in recent times. For the last 3 to 4 months, I've been very caustic and asking people to stay away from these funds. I came across in a newspaper a compilation of their performance of debt funds over 1, 3, 5, and 10 years. Let's see how they have performed. Welcome back to Bewitch. Along with this video, you will see a display of a chart of compiling of all mutual funds in various classes of debt funds from 1 to 8 funds, except the banking and PSU fund, which returned 11% over 3 years. Most other debt funds have given very poor returns for 3 years. Some funds have given 8% for a period of 5 to 10 years. If you calculate taxation that you have to pay and inflation, these returns are completely wiped out. The only fund in the last 2 years which has done well is the gilt fund, which is not covered in this. The gilt fund has done well because the Reserve Bank has continuously cut rates. The day the Reserve Bank decides to increase rates, the prices of bonds will fall, yields will rise, the losses will come home to roost. So if you have been lucky to be in gilt funds, sometime this year the funds will reach their peak and you can get out. Otherwise, there is no point in staying in these funds at this point of time. The Franklin Templeton fiasco has badly affected the morale of the debt fund managers. If you are going to get 7 or 8% return, pay tax on that, and then pay for inflation, there is no point in investing in debt funds. Might as well you can go to the good old fixed deposit or directly invest in bonds. The job of a debt fund mutual fund manager was mitigate risk and beat mutual funds by a factor of 2 or 3%, which they have done completely failed to do so. Even if you had bought a bank bond tier 2 and slept on it, you would have made more returns on it. And even tax wise, it would have been more efficient. If you had chosen largely publicly traded company with safe credentials, you would have got a higher return than most debt funds. This is very clear that debt funds have overstepped their mandate, not stuck to where they are supposed to invest, tried to be too smart, cut deals with promoters, and at the cost of the unit holders. The most famous was what is today Nippon and what was then Reliance Fund, striking a deal with the promoters of Yes Bank to lend to their private company so that the bank would lend to the promoter of Reliance huge sums of money. That case has not been investigated fully. The other case is of a Franklin fund manager investing in debt securities of unlisted companies, which he has no hope of recovery. Now they have shuttered the fund, hoping to recover it late. The fund manager had no mandate to lend to such companies. I cannot understand how an ultra short term fund can do long dated securities. SEBI, for its part, has been sleeping on the wheel, not supervising managers properly. In such a situation, it is like I have been advocating always. If you want to keep funds for long term, more than 15 years, keep sipping at regular intervals in the Nifty and the next Nifty, which is the basic top 100 companies. You can choose to invest in a liquid fund or choose to invest in an FD for the rest of the money. There is, at this point of time, no reason for a person to invest in a debt fund of any category. 1 year's return is not a great mark show. These returns have to be consistent over a long term period. Like they say in England, one swallow does not make a summer. One good year does not mean that the fund manager is going to produce consistent returns. Beware and stay away from debt funds. Thank you for watching this video. If you like this video, hit the subscribe button and turn on the bell notification. We have given you a WhatsApp number. If you want to buy my books, please send a message there. At the very end, if you would like to get in touch with me, please send a mail to berichenglish@gmail.com. Once again, I thank you for supporting Berich.